How to invest in gold without buying physical gold. Most people think investing in gold means buying physical bars and hiding them in a safe. That's wrong. And today I'm going to show you 5 ways to get gold exposure that'll actually make you money without ever touching a single ounce. Here's the thing. Physical gold doesn't pay dividends. It doesn't generate income. You're basically betting that someone else will pay more for it later. But there are smarter ways to profit from gold that actually work inside your existing investment accounts. Let's get into it. Part 1. Gold ETFs. The easiest way to start. The simplest way to invest in gold is through an ETF. That's an exchange-traded fund. Think of it like buying a mutual fund that tracks gold prices. But you can trade it like a stock. The two biggest are GLD and IAU. Both track the price of gold almost perfectly. You buy them through any brokerage. Robinhood, Fidelity, Charles Schwab, and boom, you own gold exposure. Here's why this beats physical gold. You can buy just one share. GLD trades around $190 right now. IAU is even cheaper at about $35. With physical gold, you're spending thousands just to get in the game. And liquidity is instant. If gold spikes and you want to sell, you hit sell on your phone and the money lands in your account in seconds. Try doing that with a bar of gold. I recommend starting with either GLD or IAU inside a regular brokerage account. You can also put them in a Roth IRA if you want tax-free growth. Imagine buying GLD in your Roth 5 years ago. You'd have zero taxes on those gains. Part 2. Gold mining stocks. Leveraged returns. Here's where it gets interesting. Gold mining companies move faster than gold itself. When gold goes up 10%, mining stocks often go up 15 to 20%. When gold goes down, mining stocks get hit harder too. It's leverage without buying options. The biggest names are Newmont Corporation, that's NEM, Barrick Gold at ABX, and Agnico Eagle Metals at AEM. These are legit companies with decades of history. Let me give you a real example. In 2022, gold was up about 2%, but mining stocks that held gold reserves were up 12 to 18%. That's the power of leverage. The trade-off? These stocks swing harder. They have company-specific risks. A mining accident, environmental issues, management changes. These can tank the stock even if gold is rallying. But if you believe gold is going higher, mining stocks are where the real returns happen. You can buy individual stocks or use a mining ETF like GDX or GDXJ. GDX is the broader index. GDXJ is smaller cap miners with more upside potential. I'd allocate maybe 5 to 10% of a gold position to mining stocks if you want that extra leverage. Part 3. Gold futures and micro contracts. Advanced play. This one is for intermediate investors only. Not beginner territory. Gold futures trade on the CME, the Chicago Mercantile Exchange. The main contract is GC. One contract controls 100 troy ounces of gold. At current prices, that's roughly $190,000 of exposure. But you don't need $190,000. You need margin. You can control that entire contract with maybe $10,000. That's roughly 19 to 1 leverage. 1% move in gold means 19% move in your account. Here's the reality. This can make you money fast or lose it fast. I've seen traders turn 2,000 into 50,000 in 6 months. I've also seen them blow up their entire account in a bad trade. For beginners, skip this. For intermediate investors with solid risk management, micro gold futures exist now through brokers like Robinhood and tastytrade. They're 1/10 the size of regular contracts. Way easier to manage. The play. Here's my hierarchy. Start with GLD or IAU in your brokerage account. It's simple. It works. Add 5% of your portfolio if you're bullish on inflation or currency debasement. Want more upside? Add some mining stocks like NEM or use GDX. Mix in maybe 5% of your portfolio. Futures? Only if you're actively trading and understand leverage. Otherwise, stick with ETFs and stocks. Call to action. Gold is a hedge. It's insurance. But it only makes sense if you own it the right way. Drop a comment below. Are you already invested in gold? What's your preferred method? And if this made sense, subscribe. We drop finance strategy every single week. Thanks for watching.